Have you ever wondered if your investment is actually halal in Islam? Investing can be a great way to grow your wealth, but Islam does not allow every method of making money. Some investment may involve riba, excessive uncertainty, gambling, or businesses that are prohibited in Islam. So, what exactly makes an investment halal? In this video, we will explore and explain the basic principles of halal investing in Islam in a simple and practical way. To begin with, we try to understand what is halal investment. A halal investment is an investment that follows the principles of Sharia or Islamic law. The basic idea is simple. You should earn money through a permissible activity while avoiding prohibited sources of income. Islam encourages people to work, trade, build businesses, and invest their wealth responsibly. The Quran says Allah has permitted trade and forbidden interest. So, earning a profit through a legitimate trade and business is fundamentally different from earning money through interest. But there are several important conditions that investors should understand. Among them, the first one is riba. Avoid riba. The first major principle is avoiding riba, commonly translated as interest or usury. In Islamic finance, receiving or paying interest on a loan is prohibited. For example, simply lending someone money and requiring them to return more money because of the passage of time can involve riba. This is why an investor should be careful about investments where the return is directly based on interest. Islam instead encourages arrangements where profit is connected to real economic activity, ownership, trade, or business risk. So, before investing, it is important to understand where the return is actually coming from. Second thing to understand for halal investment is avoid haram businesses. The second principle is avoiding businesses that are themselves prohibited. For example, Islam prohibits involvement in industries such as alcohol, gambling, pork-related businesses, and pornography. Other businesses may also require careful examination depending on their activities and sources of income. The important point is that a halal investment should not primarily generate profit from something that Islam considers haram. So do not just ask, will I make money? Also ask, what businesses am I helping to support? The third point to consider for halal investment is avoid excessive uncertainty and gambling. Another important principle is avoiding gharar, which refers to excessive uncertainty or ambiguity in a transaction. Islam also prohibits maisir or gambling. This means investing should not simply become a form of betting or speculation, where the outcome is essentially based on chance. For example, if someone is putting money into something purely hoping for a quick win without understanding the underlying asset or transaction, that can raise serious Sharia concerns. Islamic investing is generally based on real ownership, genuine economic activity, and informed decision making. The fourth point to keep into mind for halal investment is understand what you own. Another important principle is knowing what you are actually investing in. Before putting your money into an investment, understand what is the underlying asset? What does the company or business actually do? How does it generate revenue? Are there interest based activities involved? And what risk are you taking? Islam encourages responsible financial behavior. So, do not invest simply because someone says this is guaranteed profit. There is no legitimate investment that should be treated as completely risk free. In the fifth point, to understand this halal investment correctly, let's make a profit and risk analysis. Islamic finance also recognizes the relationship between the profit and risk. In general, earning a legitimate profit is connected with taking some level of business or ownership risk. If you own part of a permissible business, for example, your investment can potentially increase in value, but it can also decrease. This is different from simply demanding a guaranteed return on a loan. That is why understanding the structure of an investment is extremely important. Now, the most important question: how can you check if an investment is halal? Before investing, you can use a simple checklist. First point: check whether the business is itself halal or haram. Second point: check whether the investment involves interest or riba. Third point: look for excessive uncertainty or gambling like elements. Fourth point: understand exactly what you own and how the investment generates profit. And finally, the fifth point: if you are unsure about a particular investment, do not rely only on people's opinion. Consider asking a qualified Islamic scholar or Sharia advisor who understands both Islamic jurisprudence and modern finance. So, if you want halal investment that can make money for you, consider ways that are permissible, ethical, and consistent with Islamic principles. Avoid riba, avoid haram industries, avoid gambling and excessive uncertainty. Understand what you are investing in and make informed decisions. This video is created to help you for general educational purposes, not a personal financial or religious ruling. If you find this video useful, subscribe for more simple explanations about Islam, money, and everyday financial questions. Kindly like the video and subscribe to the channel. Thank you very much. May Allah be pleased with us. Ameen. Assalamu alaikum wa rahmatullahi wa barakatuh.